My name is Addison Corbin. I'm a local real estate agent. I do have a successful real estate team that focus all around the metro Atlanta area. We cover everything from commercial, investment, and residential real estate. We did about 15 million last year, and about 2.5 million of that was in commercial real estate. We just started in commercial real estate probably about 3 years ago. Is when we really started focusing on it. Last year was our year that we kind of saw a lot of improvement on that, and so we are doubling down on that this year in 2026. So basically what I want to get into today is, if I was going to be buying a home this year, these are the things that I would focus on. Right now, a lot of people are on the fence about buying real estate. 2025, we saw a lot of high interest rates, and that kept a lot of buyers on the side. The people who wanted to buy and needed to buy bought during that time. And 2026, we've seen, just from the start of the year, we've seen interest rates come down. And so that has, over the past 2 to 3 weeks, allowed a lot of buyers to get back into the market. Right now, where the market sits, is there's a lot of inventory in the market. So the buyers who do come into the market now, they are going to start seeing the fact that they are able to negotiate. They are able to get the closing costs covered. Last year, we had a lot of clients that got a lot of really great deals just for the simple fact that they were in the market and they were willing to make bids on properties. So the first thing that I would do is, before I even opened up Zillow, before I started going and looking at houses, before I called my real estate agent, I'm going to get an assessment of where I am. What am I paying in rent right now, right? The local market right now with rentals for a 1-1 is like $1,900 a month. And so we need to take that into consideration. What are we paying? What can we pay? What do we feel comfortable investing into a home as far as the monthly payment? We need to take into consideration utilities, HOA if we want to be in an HOA. We need yard maintenance, all the good stuff that goes into a home, and especially what type of home we want, right? Because there's many different types of homes out there. We got to figure out what type of property do we feel comfortable for, right? If you're going from renting a home or renting an apartment, maybe you want to look at some townhomes first. Townhomes can be great investments, especially for first-time home buyers. They're able to get into the property, maybe not have to worry about all of the extra expenses that go into owning a home, because certain HOAs do cover the exterior of the home. They cover the ground maintenance. They cover a lot of different things. So for someone who doesn't really spend a lot of time at home, who maybe works 10, 12 hours a day and doesn't have the time, looking at a townhome is definitely an option. What I've found in my personal experience, I prefer a townhome right now. My lifestyle is working 10, 12, 13 hours a day, and I don't have a lot of time on at the end of the day or on the weekends that I have to go cut grass, or got to make sure that this is taken care of or this is taken care of. So for me and my lifestyle, a townhome is what makes sense. If you're looking at buying a townhome, look for an 8 unit. Now, if you have the time to spend in a single family home and you are home a majority of the time, then a single family home makes sense. And so that in that event, what I would do is recommend us looking at single family homes. Also in 2025, we had a lot of buyers that looked at building homes and buying land and then building a property on top of it, or building a home on that land. And that's completely an option. We did a lot of those last year. And a lot of times what you're going to be looking at on that side of things is going to be a construction loan. There's many different types of loans out there, and we will go into that in a few. So now that we have our budget, now that we understand what we are looking at as far as type of home, now we can go ahead and call that real estate agent up and talk to a lender. Both of these things are going to be very important as first steps, because if you're in the Atlanta market, you need to understand you may have a budget and you may feel comfortable with that budget, but it doesn't mean that approval is going to be equal to that budget. So A lot of different factors play into this. Good credit scores, anything above a 600, 620, ideally is going to be able to apply for all different types of loans. If you're under that 620, then maybe we look at building that credit up before we step into buying a home. There are many different loan types that can go 600 and below, but those are going to cost a little bit more, and they're not going to be maybe what you're looking for. So in the event that we are looking and our credit is above a 620, and now we're in this place and we're ready to make that move, there's two different types of applications. There's a soft pull and there's a hard pull. A soft pull application is going to allow that lender to get an idea of where you currently are. A hard pull application is going to be a lot more intensive. It is going to hit your credit, whereas the soft pull will not affect your credit. So these are the things that we need to look at. Where do we feel comfortable? Our lenders personally that we use are going to start with a soft pull application first, just to get an idea of where you're at, make sure that these loan options are good, all that good stuff. And then once you get ready to make an offer or you start going under contract on a property, that's when they'll do their hard pull, if not somewhere in between there. They will always reach out to you before doing that. And so that way, if you're looking to get started and you just want to get an idea, get the soft pull application done. There's three main types of loans. FHA, which is 3.5% down. Then you have conventional, which goes from 0 all the way up to as much as you want to put down. And then there's 100% financing loans, which will basically cover your down payment. For folks that may not have a lot of savings saved up, that is always an option, going with the 100% financing loan. They do come at higher interest rates, but the money that you do save up front is going to allow you to be able to save. In my opinion, and where I'm at in my life, a conventional loan makes more sense because I'm able to capitalize on a lower interest rate potentially, and also be able to have no PMI, which is your private mortgage insurance, which does come along with an FHA loan. All of these loans have great options, just depending on where you're at with your financial situation and what you're looking to do. So now that we've talked to an agent, we've talked to a lender, we're approved. We are approved up to $500,000, and we have a good idea of what we can spend a month and where we feel comfortable inside of our budget. Our next step is to really figure out locations. We want to figure out what kind of home we like, right? What type of home. So maybe we like a Cape Cod, maybe we like a more modern build. And then also understanding that each different location inside of Georgia is going to offer different things. Do we want to be near parks? Do we want an active lifestyle? Do we want to be able to walk to a grocery store? What is important to us in our lifestyle so that we can then make the decision to buy the correct home? There are 4 different categories that I want you to pay attention to when buying a home. Number 1 is schools. Number 2 is your commute. 3 is your lifestyle. And then 4 is going to be, and probably the most important, resale value. If you were planning on capitalizing on equity in the next 2 to 3 years, then you want to make sure you're focused on resale. If you're planning on living in a home for 10 years, then focusing on resale may not actually be as big of a factor as the other 3. Something I want to add here is, as a first-time home buyer, your focus should be getting into a home, number 1, and then focusing on resale value. If you're looking at, getting into a home, and maybe it's not your perfect home, maybe it's not your dream home, but it does have it has a lot of the categories that you're looking for, at that point in time, I would say jump into that property, just because in the next 2 to 3 years, you're not going to have to pay taxes when you go to sell that property. It has to be a minimum of 2. And then from there, you can then move into that dream home because you have all the equity built up. We helped a lot of clients last year that were first-time home buyers get into those properties that maybe weren't perfect for them at that moment, but they were planning on putting in a lot of care and love and remodeling into that home to make it where it does have enough equity so that they can pull from that equity when they sell that home and buy their dream home with the money that they have inside of their first home. So there's many different ways to look at this. If you're looking at moving more upscale, if you're looking at a couple different options, these are things that you want to be able to explain to your real estate agent so that they know what to look for. So now with the current market, it is January 25th. And what we want to be looking at right now, if we're looking to buy in the next month or two, then we want to be able to focus on where the market is. The market currently, with these interest rates where they are, they're at about 6%. There's not a lot of buyers heavy in the market. So you do have a lot of ability to negotiate with sellers. And so maybe your approval is at 500, but you could also be looking at 510, 520, as long as they've been on the market for a longer period of time. Anything above 60 days, you will be able to negotiate more than likely on bringing that price down and even still getting closing costs. There's a lot of properties that we sold over the past few months that, were listed higher than where we actually bought them at. And so that's something that I would highly recommend, is focusing on how many days has this property been in the market. Even if it is listed $10,000, $20,000 out of your budget, you may still be able to get them, your agent, as long as they understand negotiation, should be able to get that property price down into your budget. The number one thing that I'm going to recommend when you're putting an offer together, you found that perfect home, is ask for all of the closing costs. You want that seller to pay all of it. And if your agent's not willing to do that, you need to move on to another agent. It's all about negotiation, and it's all about being able to create the best deal for you and your family. One thing that I do want to recommend here is it's never smart to be emotionally tied to a property, because emotions will allow you to not think straight, not think clearly. You'll overspend. You won't be willing to go heavy on your negotiations. You're not willing to walk away. And I've seen that a lot of times you can get into something that you maybe could have gotten a better deal on just because you were emotionally tied to the property. So that would be another tip. Once you go under contract, there's going to be a period of time. It's usually 5 to 10 days. And that's called your due diligence period. The due diligence period is really going to be focused on you doing inspections, making sure that this is the right home for you, talking to your lender, making sure that it still fits in the budget, all of the good stuff that needs to happen in that first week or so. It is very important that you get this stuff done. Us at the Corbin team, we make sure that we have a roof inspection done on the property, no cost to you, as well as a pest inspection at no cost to you. We use True North for the pest inspection. And what they do for us is allow us to make sure that there's no pests in the home, there's no termites, all that good stuff, so you have the peace of mind. The thing that you will have to pay for is going to be your general inspection, which is going to be everything from top to bottom for that home. And what's going to come out of that is the inspector is going to look at absolutely everything in that property. There's going to be a booklet, a textbook of many different things that are wrong with the property. At that point, don't get scared, but be able to have a conversation with your agent, and they will be able to walk you through what's important, what's not so important, what they see in every other home, and what is scary, what's not scary, right? From that point, you can then make the assessment of if you feel comfortable with this home. In the event that you don't, you have the right to terminate it within those 7 to 10 days, and you can get your earnest money back. Something we didn't really touch base on is earnest money. Earnest money is the amount of money that you will put down on that property for the seller to take it off the market. As long as you terminate within those 7 to 10 days, 5 to 10 days, you will be able to get your earnest money back. In the event that you terminate outside of that, there's a few other contingencies that you may be able to fall into to get that earnest money back. But ideally, that earnest money is held in escrow, and it is applied to your closing at the end when you close. Let's say you had the inspection done and something came up on the inspection. Inside of that inspection, you are going to want to make sure, let's just say the water heater is going bad. In the event that that water heater is going bad, you have 3 options. You can ask the seller to repair it, replace it, or have cash compensation for whatever it would cost to do those things added to your closing costs or taken off the sales price. So there's a few different options that we could look at when going into that type of situation. Now, let's say we got all of that worked out, everything's good, nothing came up on the inspection report, everybody's happy. From that moment, you will then move into talking to your vendor. They're going to ask for a bunch of documents. They're going to ask for the same document over and over and over again. It's just what happens. It's part of the process. And once we get to that stage, everything that the lender needs to be turned in as soon as possible. Okay. So once that's done, now we're looking at the appraisal. The appraisal is what the lender orders and you pay for. So it's about $500 to $600, depending on the property, depending on the company. It's a third-party company that the lender hires to understand what the value of the home is, considered in the eyes of fair market as well as the bank, because they're the ones loaning you the money. Now, keep in mind, a bank will never overpay for a property. It's not going to happen. They're not in the business of that. So, number one, when you're negotiating up front, always understand that you're not going to overpay for that property. So, there's three different options that can happen, or three different situations that can happen after you get your appraisal back. Number one, it can come in below value. At that point, you ask the seller to reduce down to that price. In the past 10, 11 years, I've only seen that happen twice where the seller did not actually reduce the price. The second option, or the second situation, is going to be the appraisal comes in at value. It means that you negotiated a good deal. You keep moving forward. The third option, which is the absolute best case scenario, is that appraisal comes back and you have equity in the property because it came in over value. You can then make some adjustments on the loan if you choose, but the price does not change just because it came in over value. So that's a win-win. That's the best case scenario. That's what you want. And that means that your real estate agent negotiated a really good deal. Once the appraisal's done, everything gets worked out, we're moving on to closing. The lender may still be asking for documents and they may still need some stuff, but ultimately that is the whole process of buying a home. From start to finish, it's about 30 days. For a normal loan, for a VA loan, you're going to be looking at about 45 days. So as far as all that goes, I'm making sure that I understand that process through and through. I'm going to ask my agent all the questions that I may have with that process so that I can understand it. If your agent's not explaining the process to you, fire them, move to a new agent. Now, with all of that being said, what I want to focus on is really just making sure that I've got a good amount of money saved up when going through this process, because there's a lot of things that can happen in real estate, in the real estate buying process, that you want to make sure that you are comfortable, right? Earnest money is about 1% of the sales price. So if you're looking at a $500,000 home, it's about $5,000, keeping in mind that it does go to your closing costs. Number two that we want to look at is going to be understanding that the appraisal costs around $500 to $600. The third piece is the inspection is going to also cost somewhere between $300 to $600, I would say, for a normal inspection. If you add other things to it, it can move up in price, but always talk to your real estate agent, ask what they recommend on that home. So if you're buying a $500,000 home, what I would recommend having saved up or ready to spend is somewhere about 6 to 8% of the sales value. So in the event that you're buying a $300,000 home, $300,000 home, $500,000 home, $800,000 home, $1 million home, you want to be able to have that amount of money saved up so that you feel comfortable moving forward. Now, it can be done with less, but it is a harder process to go through. And if I'm looking at this through a real estate agent's eyes, again, I'm focusing on resale value. I'm focusing on what areas are growing, what's happening in these areas that is going to allow me to be able to sell my home in the next 2 years so that I don't have to pay taxes on it. And what's going to happen? What are the plans of the city, right? A good real estate agent will be able to tell you kind of what's happening in those local areas. And that way you'll be able to understand, okay, maybe if I buy in Alpharetta right now at like 400, 500K, then in the next 2 years, if I buy in the right location of Alpharetta, I should be able to resell my home for $550,000, $600,000, right? All of these things that you do have got to be focused on resale value. right? Because at the end of the day, we're buying a home, one, to invest in ourselves, and number two, because we want to ultimately buy that next home. And these are the things that we've got to look at and be able to understand. So always go back to those four categories: school, lifestyle, commute, and resale value, to understand where you need to be when buying that home. There's been a lot of cases in the last 2020, in 2025, that, a client wanted to look in this area, but we were like, okay, look, you can look in that area, that's perfectly fine. But if you go 10 minutes this way, you're going to notice that the home prices are maybe a little bit lower, or maybe you're going to be able to get more yard, whatever it might be for that location. And then if you invest into this home and you help, bring the property value up, your other neighbor who has already done that sold for $100,000 more. And all they did was put in a new kitchen, new floors, new paint, and they invested, $30,000, but they made 80 just by doing these things. So these are the things that I would be looking at. These are the things that I'm concerned about. And if you're looking to buy a home, reach out to us. We're here to help. Even if you're not even in the state of Georgia, we can still kind of point you in the right direction of an agent that is in that area that you're looking to be in. And that's what we do. We're here to help. If you need anything, have any questions about the process, we're here to help. And again, we do commercial, we do residential, and we do investment.